What's up, everybody? This is Sunko, the Korean bro. Today is 2022, December 1st. And let's go to not calendar. What I'm gonna look at is yahoofinance.com because it's been so long since I read articles from yahoofinance.com. Let's go through some of the articles here. Okay. The dollar holds the key to a burgeoning bull run in stocks. Um, Stocks wobbled to start December after Powell rate a rally. Larry Fink worried about malaise. Dow Jones Futures inflation report due after S&P 500 surges above 200-day on Fed Chief Powell. Okay, this trader sees a 43% drop for the S&P 500 and says to take shelter in these ETFs instead. Okay. God have mercy on also. Robert Kiyosaki warns that the economy is the biggest bubble in history, urges investors to dump paper assets. Okay. Dow ends over 700 points higher to exit bear market after Powell signaled smaller interest rate hikes ahead. Stocks jump as Fed looks to moderate peso interest rate hikes. NEO and S&P in focus. NEO and Li Auto deliveries at record. That's good news for Tesla. Cybersecurity stocks, Zscaler and Sentinel-1 fall. Blind CrowdStrike. Though exits bear market territory, here's why investors should take it with a grain of salt. Carvana stock downgraded after 97% drop, while analysts always wait too long. Okay, let's slowly start reading all these articles, okay? Okay, up more than 300%, three monster growth stocks flying under the radar. For the past couple of months or so, the markets have mostly been trending upwards. However, such has been the strength of 2022's inflation-driven interest rate high environment that all the major indexes are still showing year-to-date losses. As a result, most portfolios are painted some shade of red, but not all have been tarnished with the same stock market brush. As is always the case, some have gone against the grain and have managed to completely sidestep the bear and exhibit some very robust growth in 2022. With this in mind, we've opened the tip range database and pulled out three names which have delivered some monster growth for investors over the past year. The sort of behavior completely at odds with the overall market trends. Interestingly, however, they also look to have gone mostly unnoticed by the street analyst community and appear still be flying under the majority of experts' noses. Yet even after notching outsized gains, some of those keeping a tap on their progress see more upside from here. Here's that. Let's see why. Target hospitality. With year-to-date gains of 306%, you could say it's been a pretty good year for Target Hospitality stock. The company is the U.S. largest provider of a specialty rental remote accommodation. That is, it offers workforce lodging, hotels for exchange stays, and um, mobile crew camps. These are used by anything from government agencies to oil, gas, and mining operations to disaster relief operations and large scale events. Accommodation aside, the company also offers the full spectrum of on site services such as ongoing maintenance, housekeeping, catering, security, and transportation. Nine energy service, blah, blah, blah. The dollar holds the key to burgeoning bull running stocks. Okay. Okay. For stock market investors, November finished with a bang. A late day rally on Wednesday swung the Dow into what some will consider bull market territory, defined as a 20% rally off recent lows. Okay. In November, major US indexes posted respectable gains for the month, with all 11 S&P 500 sectors closing in the green. The Dow finished up 5.7%, the S&P 500 up 5.4%, and the Nasdaq Composite up 4.4%. Mm. And what else we have? Fed Chair Jerome Powell stole the show Wednesday, hitting the Fed will slow down its blistering pace of rate hikes in its next meeting in a few weeks. Hmm. Okay, Thatcher. That was all it took for Nasdaq and the S&P 500 to post their second best returns of the month, with the latter closing over a key technical level. It's a 200-day moving average for the first time since April. Okay. Mm. Mhm. 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 Mm. Hmm. Stocks wobbled to start December after Powell rally. U.S. Stock futures lagged to start December as a powerful rally fueled by Fed Chair Jerome Powell's indication of a slowdown in rate increases took up breather. Futures tied to the S&P 500 were up 0.1%, while futures on the Dow Jones Industrial Average were down by roughly that margin. Contracts on the technology-heavy Nasdaq Composite were just about flat. In other pockets of the market, the US dollar index retreated to a 3-month low, and US Treasury yields held steady after sharp declines. Okay. Hmm. Hold on. Okay, let's read this one. Stocks jump as Fed looks to moderate pace of interest rate hikes. Okay. Hmm. Well, it's official. Federal Reserve Chair Jerome Powell has signaled that the central bank is considering a lower rate hike in December. Okay, after bumping up rates by 75 basis points at time in 4 hikes from June to November, Powell's comments today indicate that the Fed is leaning toward a rate increase of 50 basis for December FOMC meeting. Hmm. Noting that the Fed will still hold to its policy of targeting a 2% inflation rate, Powell also said it makes sense to moderate the pace of our rate increases as we approach the level of restraint that will be sufficient to bring inflation down. So he feels confident that we're approaching level that specific level, um, once we approach the level, uh, it's going to be enough to cool down inflation. Yeah. Um, the time for moderating the pace of rate increases may come as soon as the December meeting. The full effects of our rapid tightening so far are yet to be felt. The time for moderating the pace of rate increases may come as soon as the December meeting. The full effects of a rapid tightening so far are yet to be felt. Okay, so we've had four continuous interest rate hikes, and this coming December, he's going to, uh, of course, uh, mm, increase interest rate, but then it's gonna be somewhat lower than previous ones because he thinks that it can be moderated uh, to a level where inflation can be brought down. Okay. Uh, in response to all of this market jump on Wednesday, the S&P 500 gained 309%, while the Nasdaq added a whopping 4%. 309%, while Nasdaq added a whopping 4%. Among the winners, NEO and S&P showed substantial gains, in the neighborhood of a 20%, with UZT range platform to find out just where they stand. The results are interesting. These are strong buy stocks with notable support from Wall Street analysts. Let's take a closer look. Okay. First up is NEO, a leading manufacturer in China's electric vehicle market. While many EV companies are still in design and development stages, NEO has been making deliveries since 2018 and currently has 6 consumer model EVs on its showroom floors. The company has also introduced battery as a service to the EV sector, giving customers faster, more economical options for swapping out vehicle battery packs. In today's trading, NEO shares have jumped at minus 22%. Jumped to 22% after a briefing by Chinese health officials pointed to further move away from COVID zero, and bolstered reopening optimism. We're optimistic that the worst may finally be over, further supported by the government's gradual pivot away from COVID zero. Dutch bank analyst Edison Yu noted, looking at some internal factors, NEO at the start of November released its October delivery. Hmm. Let's look at price level of NEO. Okay. Hmm. Okay. NEO. Okay. Hmm. Okay. At the start of November released its October delivery numbers and showed a whopping 174% year-over-year increase in monthly vehicle deliveries, with the total for October coming to 10,059. For year to date, the company has delivered 92,493 vehicles, a gain of a 32% year-over-year. Quarterly results were correspondingly solid. At the top line, NEO showed revenue of $1.82 billion for a 19.7 year-over-year gain, and the company held $7.2 billion in cash reserves as of the end of September 30, 2022. Overall, NEO is showing important increases in vehicle deliveries, and you see that as a vital element in the company's story. With competition intensifying, we're encouraged by NIO's aggressive products refresh cadence. All three Gen 1 866 SUV models will be revamped in the first half of next year, accompanied by two new models. This means NIO will be offering eight models going into 23. One of the new models will be a Tesla Model Y competitor, which we're calling the ES5 and assuming a starting price of 330. Factoring in this faster new model cadence, we tweak up our deliveries forecast by 10,000 units to 270,000. Mm. Uh, people do look Neo, and mm, they're really optimistic in terms of their future. Mm. Next up is a biopharma company, but since I'm not interested in biopharma, I'm just gonna skip it. Okay, let's read this one too. The Dow exits a bear market territory. Hmm. Okay, after outperforming both the S&P 500 and Nasdaq Composite in November, the Dow Jones Industrial Average has exited the bear market territory based on oft-cited criteria on the final trading day of the month. But before investors get too excited about a new bull market for equities, there's plenty of reason for caution. The Dow DJIA 2.18% finished Wednesday session at its highest closing level since April 21st, according to Dow Jones market data, thanks to the gains spurred by Fed Chairman Jerome Powell's comments at the Brookings Institution. The blue chip gain has now risen 20% from its September 30 closing low, meaning it has technically exited the bear market territory. It's the only major equity index to do so. Okay. Typically, when a given index or asset has risen 20% or more off a recent bear market low, it's said to have technically exited the bear market territory. Throughout the history of financial markets, there have been many examples where stocks have rallied during a bear market, only to eventually turn lower and erase all of those gains. During drawn out recessionary bear market, stocks often rip higher, only to see their gains freeze again and again. This has already happened more than three times since the start of 2022, including notable counter rallies that occurred in March, in July, and August, and again since mid October, according to FactSet data. Anyway, so the main point of this article is that you have to be really cautious, even if there are a lot of signals about bull market, because if you assume that the bull market will start, um, you could possibly be wrong. So, mm. Oh yeah, here it is. Federal Reserve Chair Jerome Powell on Wednesday said it was time to slow the pace of coming interest rate hikes while also signaling a protracted economic adjustment toward where borrowing costs will remain high. Inflation comes down slowly, and the United States remain chronically short of workers. In an hour-long session of prepared remarks and questions at the Brookings Institution think tank, his last scheduled appearance before the central bank's next meeting in 2 weeks, Powell gave a short-term message that sent markets soaring. The Fed was slowing down from the breakneck pace of three-quarter percentage point rate hikes that have prevailed since June, and would feel the way towards the peak interest rate needed to slow inflation to the Fed's 2% target. But he also outlined longer term shifts that may be underway. So he he technically mentioned that uh he would have a um slow adjustment of interest rate, but then it's gonna be a long term path. Uh, okay. But he also outlined longer term shifts that may be underway in supply of labor, in particular, that could presage a long period of elevated interest rates and inflation that responds only slowly to the Fed's restrictive policy. So it's gonna take a long term period because workforce um, cannot be just produced right away. It slowly takes time. So mm, that could presage a long period of elevated interest rates and inflation that responds only slowly to the Fed's restrictive policy. At the same time, he rejected the idea that the central bank was so intent on calming the highest inflation in 40 years. mm, The policymakers would crash the economy. In that effort, insisting that a softish landing remained possible. Let's repeat this once again because it seems really important, okay? Uh, okay. At the same time, he rejected the idea that the central bank was so intent on calming the highest inflation in 40 years that policymakers would crash the economy. In that effort, insisting that a soft or softish landing remained possible, with inflation easing without a dramatic rise in unemployment. Inflation easing, okay. Uh, hmm, okay. We wouldn't try to crash the economy and then clean up afterward. Power said, with policymakers hoping not to over tighten because we think that cutting rates is not something we want to do soon. That's why we're slowing down and going to try to find our way to what that right level is, that lowers inflation over time. Okay, so they're going to slow down and try to get to level where try to get to what the right level is. Okay. Okay. Mm. Let's get to bottom. Inflation has been easing. The cost of housing is likely to continue to rise into next year, while key price measure for services remain high and the labor market tight. Data released earlier Wednesday showed there will still about 1.7 job openings for each unemployed person. Hmm. Still, they mentioned that they will stay the course until the job is done. Hmm. Reporting by Howard Schneider, additional reporting by Caroline. Hmm, yeah, okay. Anyway, this is it for Yale Finance, and let's go to Let's go to marketbeat.com, okay? Chinese users play cat and mouse with sensors amid protest. Mm, Applications for jobless benefits declined last week. Okay. Uh, okay. Mm, mm. Will easing of COVID rules slash risk for Chinese EV maker NIO? Shares of China-based EV maker NIO were up more 19% Wednesday. NIO climbed along with other Chinese electric vehicle companies on optimism after Xpeng's quarterly reports. Okay. Xpeng is up by 47%. Uh, In addition to Xpeng's encouraging forecast about deliveries in the current quarters, investors are cheering some easing of China's COVID restrictions. Hmm. China-based electric vehicle maker NIO powered more than 19% higher Wednesday. Shares were trading at $12.51 with an hour left in the session. Hmm. NIO, along with other Chinese EV manufacturers, rose in tandem with Xpeng, which reported a third quarter loss of $36. Meeting views, revenue $959.2 million came in below analyst expectations. As always, investors look to the future. There's now optimism about these companies' ability to increase production, introduce new models. Xpeng's forecast for deliveries in the current quarter was better than expected. Okay. In addition, the Chinese government may be softening its stance on COVID lockdowns amid protest that could bode well for increased factory production. So the reason the stock price of Neo and Xpeng went up is because there is a possibility that governments uh, may be softening its stance on COVID lockdowns and protests. Uh, a government official said this week that the nation has been studying adjusting our pandemic constraint measures to protect the people's interests to a large extent and limit the impact on people as much as possible. Okay. Well, the markets rose Wednesday primarily on news that the U.S. Federal Reserve may soon begin slowing interest rate hikes. The China-specific news was likely a factor in the uptick in stocks hailing from the nation. Okay. Okay. Of course, what drove their price level goes up was the comments made by Jerome Powell on Wednesday, but then what got it go upward more was China specific news. Okay, China specific news. There was likely a factor in the uptick in stocks. Okay. Uh, Revenue growth slowing. Okay. Applications for jobless benefits declined last week. The number of Americans applying for unemployment benefits came back down last week, hovering near levels suggesting that the U.S. labor market has been largely unaffected by the Federal Reserve's aggressive interest rate hikes. The number of Americans applying for unemployment benefits came back down last week, which is really good, right? Hovering near levels suggesting the U.S. labor market has been largely unaffected by the Federal Reserve's aggressive interest rate hikes. Okay, let's analyze this. Although we've had interest rate hikes, right? Aggressive interest rate hikes in the past couple of months, but it didn't really affect unemployment level because last month, was it last month? It came back down last week. Okay, unemployment benefits. The number of unemployment benefits came down last week, which is really weird, right? Supposedly, if interest rate goes up, then less companies will spend much money on R&D and sales. That means it's not gonna the companies will not hire more people. Then less people work and unemployment level goes up, right? So that means if interest rate goes up, then unemployment rate has to go up. But then unemployment benefits, number of Americans applying for unemployment benefits came back down last week, which means a lot more people work. So it didn't really affect the economy as a whole, I guess. Applications for jobless aid fell to 225,000 for a week ending November 25, a decline of 16,000 from the previous week's 241,000. The Labor Department reported Thursday. The 4-week moving average of claims, which evens out week-to-week swings, inched up by 1,750 to 227,000. Applications for unemployment benefits are a proxy for layoffs. And viewed with other employment data shows that American workers are enjoying extraordinary job security at the moment, despite an economy with some glaring weaknesses. Okay. An inflation gauge tracked by the Fed slows to still high 6%. Measure of inflation that is closely monitored by the Federal Reserve eased but remained at an elevated level in October, likely reinforcing the Fed's intent to keep raising interest rates to cool the economy. Okay, let's slowly read this sentence because it's really important. Okay. Measure of inflation that is closely monitored by the Federal Reserve eased, but remained at an elevated level in October. Okay. Likely reinforcing the Fed's intent to keep raising interest rates to cool the economy and slow the acceleration of prices. Okay. Oh, I'm getting really tired. Anyway, let's read some of few articles from mollyfood.com and that's about the I'll have to wrap it up. Okay. Wait, let's see. CrowdStrike stock size 20% after underperformance is a contrarian buy. Okay, Airbnb looks to shake up urban travel with new offering. Hmm. CrowdStrike slide 20% after underperformance. Exceeded management's financial guide in the third quarter. Wall Street is concerned that the company isn't growing its annual recurring revenue as much as it should be this time of year. Hmm. CrowdStrike subscribers and the backlog is still growing at an impressive rate, which may make the stock worth a second look after it's a big sell-off. Subscribers and backlog still growing at an impressive rate, which may make the stock worth a second look after it's a big sell-off. Okay. Mm, hmm. Airbnb looks to shake up urban travel with new offering. Okay, Airbnb is partnering with owners of apartment buildings to simplify the subletting process. The company wants to increase supply in urban markets, but it could also upset the business models of existing urban spaces. Watch for growth in urban supply and demand for Airbnb in coming quarters to appropriately assess the effectiveness of this move. Hmm. One growth stock down 83%. You will wish you won when the bear market ends. Uh, Okay. There's so many companies. Okay, this is it for today. I'm gonna see you tomorrow, okay? Bye bye.